Hello and welcome to our Workforce Readiness Workshop for today. I am Samantha Harris. I am the Director of Programs here at Hire. At Hire, our mission is to maximize the skills and opportunities for system-involved and formerly incarcerated youth and adults here in Orange County, and we do that through employment, mentorship, and community building. As part of our community building piece, I would like to welcome Jessica Contreras with Banc of California to present on credit reports and scores.
Thank you, Sam, for the intro. As I mentioned, we'll be going over credit reports and scores and discuss how they can affect the areas of your life. So yeah, we can quickly dive into this and stop in between for questions and discussions as well. Okay, so maybe the key takeaway for this session, it would be really good for us if we can go over what credit is, how it affects your everyday life, how it can help you get access to credit, loans, jobs, housing, insurance, and other important services, and understanding your rights helps you know how you can protect your credit history. So what is listed in a credit report? Um, so a credit report, it has a bit of your information. So it is information that identifies you as a person, so such as your name, your address, social security information. I believe we have someone on.
Hi, Janeth, welcome. We're just getting started with our intro. There is a participation guide in the chat if you want to follow along. For some reason, if you can't open it or click on it, just put your email in the chat and I can email it to you as well. And then feel free to put any questions in the chat or raise your hand or anything during the presentation, and we'd be happy to answer any questions.
Yeah, welcome, Janet. Yeah, we can continue and then you can feel free to stop us whenever you want to ask questions or want to get more information. So yeah, so what is listed in a credit report? It is your identifying information, your debts and some bills. So for as far as your information, it's like your name, your address, social security number. Most of the time, it'll have also previous addresses that you lived in, your debts and some bills. So any credit card payments that you have with any financial institutions, some of your bills. Not all agencies reported on your credit, but you will see it. Sometimes it's very common for like utility bills or sometimes the internet bill, public record information, and your application for new credit and other inquiries. So whenever you apply for a credit card, whether it be for like a store, let's say, or at a financial institution, it could be like, for example, Bank of America, Chase, right? So if you have multiple credit cards, you will see that in your credit report. A few other things that also might be included in there are your home mortgages. So information on the amount of the mortgage and payments that you make. That's also included in your credit report. Sometimes your rent payments, just really depends if it is reported to the credit bureau. And many of the bills or debts that you pay on a regular basis are not listed on a credit report. Some of them are, some aren't. So like I mentioned, some utility companies don't report it. Sometimes they don't require you to have Social Security, so it doesn't tie it to your credit report. And then also accounts and collections are also included. So let's say if you had, you got a loan and you didn't pay it and it eventually went to collections, that will be included in your credit report. So it's just an overall history of debt and accounts that you've had over since you started your credit. We have one more in the lobby.
Hello, Miss A. Welcome to our meeting. We're just getting started and doing our intro. Please feel free to raise your hand, ask questions, or put anything in the chat. I also attached the participation guide in the chat as well. But if for any reason you can't access it, if you want to just send your email in the chat, you can send it directly to me if you'd like. I'd be happy to email it to you as well. But welcome.
Thank you. Good evening. Thank you so
Good
much.
evening. Welcome. Okay, so next slide is on the nationwide credit reporting agencies. So these are the most common ones, right? Equifax, Experian, TransUnion. If you've ever applied for a loan, or whether it may be a lot of times that, when I see them is like when I wanted to finance, a car. They usually pull your report, and it typically tends to be one of these. So these are the the major companies where you can get your credit report, and they're called credit reporting agencies, credit bureaus, and credit reporting companies. So it's all around those lines, but they pretty much have a record of your credit. And then they also vary. So some of them they score differently. So if you have a credit history, you're likely have at least 3 separate credit reports, one from each of these companies. So the number can vary. Sometimes they're very similar, but they could vary. What is a credit score? So a credit score are number based on information in your credit reports. So they predict the likelihood that you will pay your bills and debts as agreed. They also predict payments of bills and debts. A number based on information in credit reports. Yeah, predicts payment of bills and debts as agreed. People with higher credit scores likely to present lower risk to creditors. So that's kind of what they use it based off of your history. So, and that kind of ties back to the number of credit cards that you have, the number of loans that you have, the number of payments that you've made if you've made payments on time. So that's how they are able to better get an understanding of your your activity, right? If you are reliable on paying on time, they're more likely to and willing to lend you, and open that loan for you so you can, whether it's buying a car or purchasing, something else, or just taking out a loan, you're more likely to get it when you have a higher credit score. So people with better credit scores are likely to present a lower risk to creditors than people with lower credit scores. So the higher the number, the better. And we will also discuss the number range and what is good and what is a bad credit score. Okay, who uses credit reports and scores? So you will see that this can affect your life in, many different aspects, from financial institutions, so banks, credit unions, where you get credit cards and different types of loans, including mortgages. Some landlords also use credit scores. So, when you apply for an apartment, sometimes they want to run your credit to see what your credit is like. I've also seen in applications, they will say, oh, they're not going to rent to someone with, say, I don't know, below 650 credit score, right? So different landlords have different rules and requirements, but you will see that come across. I think it's very common nowadays. They also use them to determine your credit limit or the maximum amount of money they will loan you. So this is all based on your activity. Some also use credit reports to decide if you can open a checking or savings account and what type of account you can open. Some cell phone companies, it does happen. I know, especially nowadays, because we tend to kind of finance our cell phones, right, through our cell phone companies. Let's say we want to upgrade our phone. They typically tend to run your credit to see if, you are in good standing, because they are loaning you the money to purchase that phone, and you're paying it off, on a monthly basis. That's included in your cell phone bill. So I have seen that, it does affect that as well. So it can be something as small as, let's say cell phone, and something larger as wanting to apply for a loan or for a car, financing a car. Some insurance companies in some states, they also require it. And employers as well. Sometimes they will run your credit, um, to see what your score is like. Risk-based pricing. So credit reports and scores may also be used as one factor for risk-based pricing. Other factors can include your employment history and outstanding debt. With risk-based pricing, lenders set interest rates and other loan terms based on the estimated risk that a particular consumer will not repay the loan as agreed. So lenders may charge you a higher interest rate if they view you as a higher risk borrower. So this kind of all ties back to your credit activity, right? Do they think that you are reliable? Do they see on your activity that you pay back your loans and you make on-time monthly payments? So all of that ties, it all ties together, and they base it off of that. So if they think you are at high risk, let's say you missed several payments, or you don't, maybe the minimum payment is $200 a month, right? But you only pay $100 a month, and you've done it consecutively. So they will think that you are at higher risk. So that's when they will charge you at a higher interest. They will charge you a higher interest, because they're not too sure if you are reliable with your payments or if you're making the full payment on time. So having no credit reports or scores, so this is common. I think it's very common with younger adults, right? With students who are transitioning from, like being student, living at home, to kind of going on their own and entering their adulthood. So it's called credit invisible. I've also heard of like ghost credit. So it's like they can look you up, but it doesn't show any activity. And it's just because you may not have a credit card, or you don't have any loans, you haven't borrowed any money. So not that it's bad. I think it's good. That's a good starting point. It's better than being really low in score, but it's just that you don't have any activity. And sometimes that can affect your chances of getting approved for a loan or a debit card. But it just really means that you have to work on growing your credit report and your credit score. So yeah, it can result in having a harder time in getting a credit or a loan, renting an apartment. I will say though, for renting an apartment, I've seen it multiple times where if you let the landlord know, oh, just so you know, I don't have credit because I've never opened up a credit card or anything like that, but I don't have any debt. A lot of the times they're very flexible, and they understand that you kind of have to start from somewhere, I know for me, when I like went off to college, that was one of the things I mentioned, because I didn't have any credit, but I was trying to get an apartment. And they were very understanding. They were very understanding. They're like, oh yeah, it's better than having a really bad credit score. So I always say, be transparent and let them know if you know that you don't have any credit, as in like the ghost credit. So opting out, this is kind of based off of, and this typically tends to happen once you, let's say, open up your first credit card, or have your first loan. You start to receive all of these mail offers on, oh, you have been pre-qualified. I'm sure a lot of us get those notifications, right, in the mail. Like every bank is trying to offer you a credit card. So you could also opt out of that. Many people don't want to receive pre-screened offers of credit or insurance. So opting out reduces unwanted mail and information that could be used to steal your identity. You could opt out of these, in that that worksheet or the workbook that you have, there's more information on numbers that you can call or mail, so you can opt out of those. Which reminds me, I should do that because I've been getting a lot of them lately.
I didn't even know that was an option to do that. That's great because you're right.
Yes.
And I think that's a good point too, especially new students. I mean, I know I'm getting them, but I think when you're a new student in college, I think they're on campus. I mean, they're everywhere. So I think that's a good point.
Yes. Yeah, and you know what too? We get these notifications and it says like, oh, you're pre-approved. But when you have like a ghost credit, it doesn't necessarily mean that you will be approved. They just kind of automatically send them to everyone.
Yeah.
So I think if you're really wanting to build your credit and maybe you feel like you're receiving all of this mail, offering you a credit card, just know that you may not get approved because you have like a ghost credit, right? Or you may have a bad credit. But all of these financial institutions, they send you these offers hoping you apply, but it could also affect your credit if you're applying to multiple
Mm-hmm.
and not being approved.
Yeah.
So yeah, be very cautious, definitely. So yeah, the key takeaway for that section was just your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. And understanding your right helps you know how to protect your credit history. So opting out of those ads and announcements that you keep getting in the mail, I definitely recommend that. And like I said, it reminded me that I need to do it. I believe it opts you out for a few years. I think it's like 3 to 5 years. And then you might see an increase again in ads. Okay, so we'll dive a bit more into credit scores and kind of like the basic of credit scores and what number is good and what number is bad. So you can take steps to improve and manage your credit scores. This includes paying your bills on time and as agreed. So the basics of credit scoring is the number calculated from information in credit reports. Generally, the higher the number, the better the credit history. It predicts likelihood of payments of credit obligations on time and as agreed. Two significant factors affect your credit scores, whether you repay debts on time and as agreed, and your credit utilization rate. So we can dive a little bit into that as well. Does anyone have any questions for now?
Um, yes, I had a question, but that was early on as far as institutions. My question was, I don't know if this is a silly question, but other than when they run your credit and to build your credit outside of how you apply, like utility, phone, blah, blah, blah. When you say financial institutions, does that mean like when you go into school too for financial aid?
Sorry, can you rephrase your question?
Okay, so we know that with credit, you have to be able to apply for utility, phone, insurance, like that.
Mhm.
So is financial aid a part of that building credit? I always was curious to know, like you can get a credit card, you can do all of these things, right? But is financial aid a part of that when we apply for school and stuff like that?
No, no, because
Right. I figured that.
financial aid is solely based off of your income, right?
Okay.
So yeah, they rely on your tax returns,
Mm-hmm.
um, to, figure out how much you are approved for financial aid.
Right, right. I was curious about that. And then one more question, for the opt-out. When you
Mhm.
opt out, can you still apply for insurance, any type of insurance? Like once you opt out of a system, you would be okay. Like say if you had to switch insurance companies, would that still be okay for you?
Yes, yeah, you can still do it. I think the opting out will just really help reduce all of that. I call it like the junk mail and getting all of those offers that you keep getting because and I always say it's really good to opt out just because we get all of these offers and most of the time they're not accurate. They offer you a certain, interest rate or a certain amount. Let's say maybe they're offering you, a $5,000 a credit limit, but it's not always accurate. Like they want to run your credit before they can I mean, they have to run your credit before they can actually tell you a number. But yes, you can, yeah, you can opt out and then you can go on, let's say you need to change your car insurance or whatnot. You can go and, call any car insurance company and do that.
Thank you so much. Thank
Mhm.
you.
Great questions. Please, Janice or Miss A, just chime in whenever you have them. Don't worry. No,
Yes.
no dumb questions.
Thank you. Thank you.
Okay, so just a bit more basics of credit scoring. There are multiple producers of credit scores. These are the most common ones. The FICO, I feel like that's the one that we kind of hear a lot, right? Your FICO score, Vantage score, and there are a few others as well. And then there are different models for different types of credit. So some of those models refer to like auto loans or mortgages. And then these are the 5 factors in a general FICO model. And this is kind of like the guide that they use to come up with your score. But like I said, there's different models and sometimes your score will vary, but it usually tends to be around the same. You're never going to see like, oh, you have a 601 and then I don't know, 750 another. It's never going to be that drastic. It's usually just a few numbers off. As you can see, the two biggest ones that play into your credit score is your payment history. So how often are you paying on time? And not like hitting those deadlines, not being late on payments, and then the amount owed. So a lot of that is like based off of your credit line and then the amount owed to your based on to your credit line. They typically say to stay around that 30%. So let's say you combined, let's say you have several credit cards, you have a $10,000 credit limit. They want you to stay around the 30%. So maybe don't spend more than the 3,000. Um, and it's silly the way it works because they give you this large limit sometimes, but they don't want you to like pass the 30%. Otherwise, it can, bring your score down. And then the others are new credits. So every time you open up a new credit, whether it's credit card or financing a car, whatever it may be, the length of your credit history. So how long have you had your credit cards, how long have you had your car loan? Obviously, when you're financing a car, it typically ends in that 5 to 6 or I believe up to 7 years now. Um, and that's okay. I think it's also, I know sometimes they say, oh, like don't let your accounts close. I think definitely don't let all of your accounts close. I think having a longer history is really good, especially it can definitely come into play when let's say you want to buy a home, right? You want to get a really good mortgage rate. And maybe you've had credit history with Chase or with Bank of America for a long time. So like you can kind of go directly to them and see what they offer you. And sometimes it can be a better rate than others. So yeah. And then the credit mix. So that's a combination of credit cards, retail accounts, installment loans, finance company accounts, mortgage loans that you have. So it's just a general mix. Okay, so order your credit scores. So you are allowed to also order your credit score. It may not be the one that is like maybe currently used because there are different agencies. So sometimes, I don't know, you can, let's say you go and want to finance your car, right? They pull the was it the Equifax? They pull that one, but they might not pull the other. So and the number can vary. but you're also able to request it as well. And you're also able to pull your own credit report. Let's say you want to take it to, and I've seen this a lot. Let's say you want to finance a car, but it might not be giving you the best rate. You could also pull your own credit report and take it to, let's say, a credit union, and they can offer you something better. And then if you are turned down for credit, you have the right to see the exact score that they used, and it will also show you the agency that they pulled it from. So it won't just give you the number, it'll show you the agency. What is a good credit score? So these typically tend to be the ranges, and this is all based off of the FICO score, which is one of the most common ones. So exceptional, above 800, very good, 740 to 799. Good, 670 to 739. Fair, 580 to 669. Poor, 300 to 579. And obviously, the higher the score, the more likely you are to qualify for credit, rental housing insurance, sometimes even employment, that maybe, renting an apartment, and utility companies and whatnot. You can take steps to improve and manage your credit score. This also includes paying your bills on time as agreed. I think that's like the biggest thing, right? Making sure you pay your bills on time. That's 30% of the way that they rate your score. So really be, on time with it, early with it, and making that full minimum payment at least. And, if you're able to pay more, obviously pay more. Yes, question.
Outside of a secure card, what card do you suggest to put on to your credit to where they can see that you're making these payments on time and being consistent? Like, which card would you, does that make sense? Which card,
Yeah.
yeah.
Um, well,
Would you
I
suggest a secure card or do you, because to me, it's like, it's not safe anymore. I'm kind of like old school. I'm like, okay, you have to be careful which card you actually use online. So you don't want to really like use your actual bank card. So, but you have to use a card that you make payments with. So I was just curious if you had any advice to which card that you would use in order for someone to continue to build their credit.
to build their credit. Yeah, that's tough. I don't have a recommendation for you. Um,
Do you suggest a
I
secure card? Because that's one of the, I know that's one of the ways I suggested it to my teenage daughter, like if she's trying to really build and stuff like that.
built,
And she's in her
yeah,
first year of college. And that's what I told her she would want to get a secure card and just start out there and then not open too many
yeah. I
things.
mean, I think that definitely does help. I will say it does help because that's what I did as well. Um, but I think I also think it's really important to make sure that your social security is tied to your utilities. You would be surprised how many people don't have that. So, and I can give a personal example as well. So my husband, he's not originally from the States. He's from Brazil, and he got his legal status, and he's kind of like a ghost. He has like a ghost score because he just didn't really have anything, right? So what we did to also build his credit was to include him in all of the utilities. So that way, it's a small change and it helps. It's not going to, automatically increase the score as, let's say, a car loan, right? But with the utilities, it's starting to kind of like notify the credit bureau that, oh, the payments are being made on time. So all of that helps. So like including him in, we have Verizon for the Verizon bill, the gas, the electricity, all of that. If she's able to do that, it helps. I know sometimes it's tough, like especially if she's not living at home. and she's like renting somewhere, sometimes you're kind of just paying your portion of it, right? So I know that can be a little bit tough, but I think small things like that can, can make a big difference in the long run.
Okay, thank you so much. I was just wondering, how can they see that? So they have to see it through a card, or is it, there's no other access for them to see that you're actually making these payments?
Payments, yeah. Yeah, I don't, yeah, I wouldn't know. Because I mean, the only other thing would be like if you have a credit card, and it could just be for sometimes it could just be like a store credit card. You could include make her like an authorized user,
Right, right.
and yeah, and like that could also really help her as well.
Right, right. And sometimes I got to be careful with that too, because if
Yes,
you as a parent have such, a history of, you don't want to really start the child off in a situation where it could be tricky, it could affect them as well. So that's what I've been scary about. I'm like, okay, I don't want to affect her good life coming towards building
yeah,
herself next to, things that has happened over time that we can't control, as far as
absolutely.
our reports are concerned. But I thank you for that. I won't hold up the workshop, but thank you so much. I
Yeah,
appreciate it. I appreciate
yeah,
you sharing.
I think the authorized user, I think it can be very helpful. Um, I think obviously maybe not on every single card, but like let's say you have a card that has a very low limit. Like that would be good. You can add her because you know that it also like you can explain to her the way credit works and how it will affect if she doesn't make the full payment, but also it allows you to monitor it and ultimately like if you have an app on it with that card, like you can even block the card eventually if you feel like, oh, you know what, maybe she's like kind of getting out of hand, she's spending a little too much and isn't really fully aware of her spending habits. You could also block it. So I
Thank
think that's a good starting point if the
mhm.
credit card limit is low.
Okay, got it.
Yeah,
Thank you
because
so much.
yeah,
Yeah, because you
I
have to be, what is it? How does that work? 30% of some sort. It has to be,
yeah, I'd
right?
say it's 30%, but
Yeah.
it's not reported. So let's say if the limit is 1,500, right, for the card, and let's say she went over the 30%, it's fine as long as it's paid by like the due date. Because she can spend more than the 30%, but if she's not paying it on time, then after it closes, I believe it gets reported like I think 60 days after.
That's about right.
Yeah.
That's why I always mention it's best to pay it like right away. Don't wait for the bill to come in.
Yes.
Just
Yes,
pay it,
yes,
like, you know what I
absolutely.
mean?
Yes.
Thank you.
Okay, so we'll discuss a bit more on how to get, review, and understand your credit reports and scores. So it's always recommended that you request a credit report, and so that way you can review it at least once a year and just check if the information in there, whatever was recorded, is accurate, and you are able to dispute anything that you feel like that was inaccurate. So you are allowed to get one free credit report every 12 months for each nationwide credit reporting agency. So some of the few that we talked about, the Equifax, Experian, and TransUnion, you can request it from each of them. And this is the website annualcreditreport.com to fill out the orders for these free credit reports. And all of this information is also in the guide. I know the guide is quite lengthy. We shortened the presentation to keep it under an hour, but the original guide is meant to be like, I think about 3 hours. So um, I'll keep referring back to the guide, and I highly do recommend you go back in there. And even if you don't want to look at it now, but maybe down the line in the future, you can go back in there. So always watch out for imposters. There are sites online Some that might even look like the annualcreditreport.com site, who want to, they charge you a fee to try to pull your information. But just be very careful with that. So this is on the right to additional free credit reports. So in addition to the free credit reports you are entitled to every 12 months, you can get another free credit report directly from each nationwide credit reporting agency every year in several specific instances, including if you are receiving public assistance, if you are unemployed and looking for a job, if you believe your credit report is inaccurate due to fraud, if you receive oh, sorry, I said that. Public assistance, yeah. If you have been denied service, an apartment, or employment. So like I mentioned earlier, if you are denied, you are able to request it. And also it'll kind of give you your number and it'll let you know from which agency it was pulled from. So what sections are in your credit report? There are different formats, but Equifax has its own format, Experian as well, and TransUnion. But they all contain the same information. It's just the formatting is a bit different. It'll have your personal and identifying information, so your name, address, social security. It'll have public records, accounts assigned or sold, credit accounts, and inquiries. So I believe I know maybe we didn't, some of you hopped on after, but it kind of talks about like all the credit lines that you have, those that have been closed, any maybe mortgage that you have, or credit cards open, credit cards closed. So it could be from, let's say you closed, I don't know, like a Macy's card, years ago. You'll also see that on there as well. So just a reminder to get and review your credit report at least once every 12 months. And like I said, in that manual that you have, the guide, you can get all of that information on there. So I highly recommend you read through that. And it will also show you kind of how to fill out the form as well. So if you need assistance with that, please refer back to that guide. So errors on your credit report. So it has happened where credit reporting agencies make mistakes and you'll find errors on your credit report. The only person who is best at identifying those is yourself. Your credit activity, what credit cards you have open, when you make your payments. So it's always good for you to take a look at it and be able to identify any errors. Seven-year reporting example. So this is just kind of based on figuring out, I believe, sorry, I think there was a slide between these. Okay, believe there was, but maybe we can continue and then we can also look back to the guide after. So it can be confusing to figure out when the 7-year period starts and ends, since a debt can be sold and resold. So it generally starts 180 days or about 6 months after you stop paying on that debt. So here is an example. Let's just assume August of 2018, an account is 30 days late. It doesn't matter which day in August, only months are counted, not days. So in November of 2018, that same year, the account is 120 days late, right? From August to November, 120 days late, and creditors closes the account. So the delinquency starts in August. July 2018 is the month before that. Oh, sorry. Sorry, everyone. Okay, I will probably have to get back to you guys on this 7-year reporting example. I believe there was a slide before then that would help me better understand this. But so I believe it's essentially what it's saying is that 7 years. So after 7 years, the account will no longer be reported on your credit report. Yeah, but I'll be able to better give you dates. Maybe after this session, I can look it up. I know there should have been a slide before this. Apologies for that. So there were also slides in that packet on how to dispute errors on your credit reports and how to build, repair, and maintain a productive credit history. Like I mentioned earlier, the slides are meant to be much longer, but due to timing, we had to cut them down. But I'm going to go through a few slides that are kind of just the main points for these topics. So to repair and improve credit, so first step would be like get and review your credit score, right? You want to see where the errors are and if there are any disputes that need to be made. Pay all your bills on time and as agreed. Use as little of your credit limit as possible. They say 30%, but also that's the 30% that is being reported. So if you're paying your credit card completely, it's not going to affect it at all. It's just kind of more of that that limit that's carried over after the for the following months. So if you use up, like, let's say this month you use up 100% of your credit card, but you pay it off, it's not going to show that you used 100%. It's going to show as a 0% because you completely paid it off. Using a credit building strategy, that's always helpful. Just kind of like, and that kind of ties back to understanding the way credit works and the percentages that affect your credit score. Keep old accounts open if you can. Apply for credit only if you need it. Negotiate different terms. Ask for a goodwill deletion. So build alternative credit history, document other payments you regularly make. So this kind of goes back to like the bills, right? All of these bills, they do make a difference. And I know there's small increments that they make into your credit report, but it can help. It can help and it'll show that you're paying on time and you're not late to your payments and you're making full payments. So this includes rent, childcare, cell phone bill, electric bill, gas bill. For all of the utilities, I always recommend going onto your online account and checking to see if your social is attached to your account. And that's the easiest way. And I don't think you can add it right away, but you can call and have them add it. So build credit, get a secured credit card, get a credit building loan, become an authorized user on an account, get a co-signer, apply for a credit card at a store or a gas station, make a large down payment, and negotiate a loan for the balance. Maintaining credit, pay your bills on time and as agreed, continue to pay down your debt balances, keep the proportion of the credit you use low compared with credit limits. So that kind of goes back to that 30%. That's usually like the soft spot. Don't apply for too much credit. Also, don't apply for too much credit during a short amount of time. That can ding your credit really quickly. Avoid actions or inactions that may create new entries. Pay your taxes and child support in full and on time. Check your credit reports and regularly dispute errors. Keep good financial records. Getting help. You can, go to your local financial institution, your banks, credit unions, nonprofit consumer credit counseling services. You can find these at many different nonprofit organizations throughout your communities. Housing counseling agencies can also assist, financial education, nonprofit organizations, certified financial planners, and others. credit repair and debt consolidation. Credit repair companies, they promise to fix your credit for free. That's, I think that's a lot of times you have to be very careful with that. They can assist you, but ultimately it's really up to you, right? Like how much you are paying your debts on time, your bills on time, and making full payments, or not utilizing that full credit utilization rate that you have. Be aware of credit repair scams. So they're you will see them a lot. You may also even get them in the mail. Be aware of those that say that they promise to erase your bad credit or remove other negative dings on your credit, that they promise fast and easy credit repair, or want to pay up front. Sometimes you get those, mails as well, junk mail that say, oh, we'll pay off your credit card, and we'll give you, let's say, I don't know, a 3% interest rate. So beware of all of that. And especially there's some that you will find that they try to make it look like they're a government agency, but they're not. So be very careful with that. And a final key takeaway is that your credit score does not have to be your credit feature. So there's always, time and room for improvement. And it's never too late to, start trying to make these changes to better your credit score. Do you have any questions?
The slides do we get them in an email? The slides, or no?
Miss A, did you see in the chat that there's actually a very robust participation guide that you can click on? But if you want to put your email in the chat, I can also send that to you.
Okay.
And there's like a lot of, I was just gonna say, for anybody, if you haven't clicked on the participation guide, there's a lot of good information, sample letters to dispute credit and things like that in there.
Okay, so let me just real quick before you guys dismiss, I'm gonna give you my email, and then you could just, because I'm not logged in. I just had to jump on real quick and I didn't log into anything. So
yeah, I always recommend going to the guide just because it's so much more extensive and there are samples. So like, let's say you want to request your credit report, right, from all three of the agencies. It'll kind of guide you on how to do it. Like I said, that whole guide is meant to be like a 3-hour presentation. So we really cut down the slides. But go into that guide and really read through it and see what sections will benefit you most, and look at the different resources.
thank you for such a great workshop.
Thank you.
And I just emailed it to you. Any other questions?
Thank you.
You're welcome.
Nope, I think that's it.
Well,
Yeah.
thank you so much, Jessica, for your presentation. Thank you so much for joining us today. Our next workshop will be on borrowing basics, and that'll be on Wednesday, June 17th at 3:00 p.m.
Thank you, Sam.
Thank you.